Hey traders, Mike Sir here. Welcome back to my channel where I profile the top traders in the world and teach you how to replicate their incredible success. Now, during my 23+ year trading career, I read hundreds of books on trading, and one stock market book that is still considered to this day to be one of the classics, and it's the book How I Made $2 Million in the Stock Market by Nicolas Darvas. It's a book based on the original 1960 edition where Nicolas shares his extremely profitable and unique box system which he used to buy and sell stocks. So in this video, I'm going to share with you how Nicolas Darvas made over $2 million through trading, which in today's dollars would be $20 million, and teach you his Darvas Box trading system, which many traders use to this day. Now let's get started. Nicolas was born in Hungary in 1920 and began his career as a professional dancer. He immigrated to the United States in the 1950s with no formal financial education, but he became interested in the stock market and decided to try his hand at trading. Now, he quickly realized that his background in dancing actually had given him a unique perspective on market trends, and his trading methodology was highly successful. In fact, he made a fortune by investing in stocks such as Xerox, Polaroid, and Walgreens. In fact, he was able to turn $25,000 of his own money into over $2 million in the stock market. Now, $2 million in the 1960s was a lot of money, and after accumulating his fortune, Nicolas documented his techniques in the book How I Made $2 Million in the Stock Market. And at that time, Nick's trading approach was quite controversial as it went against traditional trading wisdom. However, Nick's story was a great example of the power of unconventional thinking and the importance of finding a trading approach that works for you. Also, it was a reminder that you don't need a formal education or background in finance to be successful in the markets. Now, the book went on to become a bestseller and popularize his effective box trading system. Before I share with you Nicolas' unique trading method, please smash that like button and hit subscribe if you haven't already. So let me explain to you the Darvas boxing system. The system utilizes technical analysis to identify trending stocks with strong potential for significant price appreciation. Now, the basis and assumptions of the system is that a stock's price will tend to move within a defined range, or what he calls a box, before breaking out to new highs. Now, the first step in using the Darvas box system is Nicolas identifies stocks that are in a clear uptrend, and this can be done by looking for stocks that are close to their 52-week highs or already made new highs in their stock prices. Now, once Nicolas has filtered through all the stocks that meet this criteria and are clearly consolidating sideways, he draws a box around the stock's price range. Now, to do this, Nicolas will look for a high and a low point on the stock's chart that are approximately the same distance apart. And these points will be used to define the top and the bottom of the box. And Nicolas would then draw a horizontal line at the top of the box and another one at the bottom. In addition, Nicolas prefers that stocks move up no more than 10 to 20% up or down within the box, and this signals to him that it's a period of consolidation before the move up. Now, one last important point is that the stock price has to stay within the box and can't drop below the lower edge of the box. Now, if at any time it did, he would not consider buying that stock anymore. So once the box has been drawn, he would then wait for the stock to break out of the box to the upside. And this is when the stock's price rises above the top of the box. And when this happens, Nicolas will buy the stock at the market price. Now, once the stock has been bought, he would then place a stop loss order at a point just below the bottom of the box, and this will limit the trader's potential losses if the stock's price falls. Nicolas would then wait for the stock price to continue going higher and will keep holding the stock as long as it remains above the top of the box. Now, if at any point the stock falls below the bottom of the box, as I said earlier, he will sell the stock immediately. Now, let me show you guys an example. Here's a chart of Tesla, and you can see here that the Darvas box system works very, very well. So if you look here, Tesla here had made a 52-week high here, and then you can see the stock basically going sideways and approaches the 52-week highs. So this is where we want to see essentially a consolidation. So you can see here that the price basically emphasizes that the top of the box right here, you draw the extended line here,
and then establish a lower end of the box. And within this time period of essentially over a month, the price stays in this range until it breaks out of the box right here and it moves up. Okay, so that's what Darvis was looking for, Nicolas is looking for. And then it now creates another box. So it creates another range. And in this instance, this box is actually a much wider range. And you can see here, this is the top of the range. He draws across. And this is here, bottom of the range. And at no point, the price goes above the box or below the box. So then you have to basically wait. And then once it breaks out the box, this is when you buy. And you can see here, the price keeps going higher. And a perfect example, the reason why I use Tesla is Nicolas likes companies that have innovative, revolutionary products, and especially with the electric vehicles, Tesla is the leader in that sector. So it fits the profile of the stocks that Nicolas looks for.
To summarize, the Darvis Box system is a simple and effective way to identify trending stocks with strong potential for significant price appreciation. And by following the system's rules for buying and selling, traders can potentially maximize their returns while limiting their risk. And it's important to note that the Darvis Box system is a technical analysis tool, but Nicolas does mix in some fundamental analysis to determine what stocks to target. And he believes his strategy works the best when applied to fast-growing sectors or industries or companies with revolutionary products. In addition, companies with strong earnings would also work very well. Now, there's no such thing as a foolproof trading system, and the Darvis Box system certainly has its limitations. And many critics attribute Nicolas' trading success to the fact that he traded in a very bullish market where stocks were only going in one direction, and believes that his results cannot be attained in a bear market, where the overall trend of the market is down. My thoughts are the same, as this system is ideal for a strong bull market. Thanks for watching. If you like this video about Nicolas and you want to learn more trading strategies from him, I've included an Amazon link where you can buy his book. I'll see you guys all in the next video.